Thank you all for joining in. The webinar will begin shortly in the next few minutes. Good evening to each and every investor present here in today's forum. The topic today is something special and different from what we cover in our regular webinar series. We have with us our CEO and founder, Dr. Mohit Batra, who would be taking us across his journey in the investment space and also talk about four investing stories of wealthy investors and how we can learn from their experiences. Towards the end, he would be answering some of your questions, which you could drop in the chat box and Q&A section. Over to you, Mr. Mohit.
Thanks a lot, Jason. A very good evening to all of you. This is a very important webinar because it's very close to my heart. This is something you can, we can share about product details. We can share about our strategy as I did yesterday. We can share about all the facts, but the learning and experiences is something that don't come easy. And I personally believe the software aspect of learning much more than any tool that we may develop, because ultimately, whatever tool is given to you, it is how you use that tool that matters the most. All of you guys have the same set of tools that we render across Markets Mojo. All of you guys get the same advice. All of you guys have model portfolios. You guys have stock research. You guys have various other things that is common across the whole Mojo professional base. I can tell you that in the next 5 to 10 years, I will have multi-bagger investors from the space, and I will have people who would have lost money, even when the advice would have made money if they had stayed with certain qualities within that. And I can also tell you that the number of investors who would typically make money would be in the range of maybe 15 to 20%. When I say make money, it is not about the advice they get. Everybody gets the same advice. It's about the qualities that they inhibit when they do their investing journey. So you can imagine what I'm trying to say here. I'm saying that the same set of tool given to 100 investors, 20 of them will become multi-bagger investors, and the remaining may or may not make money, because with the same set of advice that they got, they didn't inhibit the softer aspects on which you need to look at uh, look at taking care of your investments, rather than they were busy in looking at only the stock research and the model portfolio returns, or maybe so on and so forth. So hence this story or these set of stories are very important. The modus in which I would take this particular webinar is I would talk to you about 4 stories individually, and then I will talk to you about some common factors that I draw from those stories. And then finally, I will talk to you about 2 things which are the biggest learnings, because it is difficult to go through the whole presentation of maybe 20-30 slides and then remember everything. So I'll give you the 2 main things that you can take back from the today's session, and then we will get on to the Q&A. Now, in terms of the 4 investors in focus, this is the second series that we are doing. The Investor one is one of the largest investors in this country. I'm not taking anybody's name because it's confidential, but this investor is worth over $2 billion. Investor two is somebody who I personally work with, and he's in the range of around 800 crores today. Investor three is somebody who's in the range of around 500 crores. He is somebody who's ran a lot of businesses. He's not had his own business, but he's ran as a professional, and I can tell you that his earning was not even 1/20th of what his net worth today is. And investor four is a professional. Again, earnings will be around 1/20th of what the net worth is today. The common factor across all of these 4 investors, the common factor, right? A lot of us feel that these investors were born wealthy, or these investors came with a lot of money at initial level to start with. I can tell you the common factor of all these 4 investors was that they didn't come with any money in their pocket. They did not come with any money in their pocket to start investing, and they have reached here by solely being in the markets for 25, 30 years. And they have made every single wealth that they today are known for from the equity markets. There are 4 examples that I'm taking here. There are multitude of examples of investors who are not equally, maybe more successful here. And their stories typically imitate the common behaviors that we're going to talk about today. Now, in terms of the main thing that you need to know is that the one investor, let me just talk about these 4 investors. The first investor obviously is a very well-known investor, very educated, has a very keen eye on the data. He reads the data from the back of his hand. He can typically look at data and can tell you what is going to happen with that company. And that is an experience that he's generated over a long period of time. His success rate is closer to, I think, 20 odd percent on the stocks that he's invested. But in those 20%, his allocations are so high that, or has been so high over the last 20, 25 years, that this wealth has been created. Even though he has a lot of mistakes in the portfolio, which a lot of times press picks it up. But having said that, his movement in terms of cutting losses and moving back to areas where he can concentrate on creation of wealth is what he's known for. So, analyst, great research guy, your investor number one, reads the data like nobody else in this country. But having said that, still runs a success rate of around 20%. But at the same time, his allocation to those 20% stocks are so high that it creates all the wealth and keeps. Today, if you look at his total net worth, around 80 to, I think, 70 to 80% comes out of two or three stocks. And that is not how the whole built up was started. The whole built up was started in a very diversified 15, 20 kind of stock buying pattern. And then finally it got allocated to maybe 10 stocks. Finally, more allocation towards the stocks that were doing good over a period of time. And today it is where it is. Investor number two used to drive a scooter or be in a bus in the year 96, 97. That is exactly the same time that I came into the markets as well. And this particular investor is nothing but all uh, fearless attitude of investing, very less trading portfolio. But having said that, completely fearless in terms of the approach that this investor follows. The concentration again here, if you look at, I personally had experience of interacting with all these four investors, but I have worked with the investor one and two. Now, in the second case, where I've seen something which is something very interesting to note down, is that this particular investor has lost so much money. I think it is equal amount of money that he would have lost, but again started in the year 96, 97 at an absolute zero, right? Completely zero. So people who travel in buses today may feel that this kind of wealth is not something that you can dream of. But again, this kind of a wealth came from absolutely nowhere. As I said, I have seen this investor booking huge amount of losses and not being deterrent to losing money, because the learning that I got from this investor is that unless you lose in the market, you cannot gain in the market. There is nobody who keeps gaining one way in the market. Unless you don't lose in the market, you cannot gain in the market. And hence, every day is a new day when you would start. But every day, the conviction has to be there rather than being disheartened with the losses. So, that is a very, very deep learning that I got from this investor. Let's go to investor number three. This investor is one of the most principled investors that I've seen in my life. Very principled. One of the most suave, smooth investor is he only does investing. And I think his net worth is maybe now much more than this. It may be double of this amount that I'm telling you today. This investor sold off his house, and I'm not telling you by any chance of imagination you should be doing that. But he was so convinced that he has to get into, creation of wealth, that this person, this investor hates the whole concept of real estate investing. Whenever I meet him, he's a very dear friend of mine for the last 25 years. He always says that cement sector means paisa kitna bana loge, how much will you make money in your properties, right? The money has to be invested over a long period of time. Till today, this investor lives on a rented flat. Till today, he lives in a rented flat. He doesn't care. and he loves the whole concept of living in a rented flat, because he would say that, I can today take a rent of maybe 20 lakh rupees a month. It doesn't matter to me, right? But that is the whole concept with which this investor comes in. Academically brilliant, again very good on analysis. Again, I would say I have known this investor for more mistakes that he's done, but the successes, and again the success has got concentrated on certain stocks which have given exponential returns, where the allocation was exponential. And that is one thing that I've learned from all these investors, that by the time the stock becomes multi-bagger or gives an exponential return, somehow they are able to move majority of their wealth there, so that the impact on their net worth is also equally exponential. So that is a great learning that came from investor number 3. Now, investor number 4 is somebody who's a professional, knows nothing about investing, zero on investing, but he had hired me to look at his wealth. Uh, and this investor, I dealt with him for over 5 years, and I can tell you that this is the 7x kind of a approach that he saw, with just one thing, which is you stay focused on my investments. Do not come and meet me even if the market is down. It's not your fault. Just make sure that you're there invested in good companies. That's your job. So whenever I used to go to meet this particular investor, he would always tell me the same thing. Have you got good news or have you got bad news? And I used to always tell him that if I have bad news, then he used to not entertain me. He would say that, Mohit, there's no point you giving me any bad news. I know what the bad news is. I can track my portfolio. But if you have good news, if you have good opportunities, then we'll talk about it. Now, this was I stopped managing this particular investor in the year 2015, and I am made to understand that his wealth is double today. The reason today he has a family office. Today he has set of his own advisors who work with him, but his aptitude to investing is at a different level. The first 3 investors are seasoned investors. The fourth investor that is here is like you, who is does a has a profession of his own. He works on his own, and but he's learned the art of not investing, but he's learned the art of being an investor very well. So there is a difference in being a lot of us try and be good investors, try and be good stock pickers, try and be good product finders. But this particular investor has been none of that. He doesn't look at a stock and try and figure out a good stock. If somebody comes and tells him that this is a good stock, and obviously he would allocate out there, and if the stock moves, he'll allocate more. But he is a guy who's got only and only good qualities of being an investor. Nothing in terms of analytical skills, nothing in terms of knowing the markets very well, nothing in terms of having his own view. He can talk numbers to you, but he is not even a guy who's studied numbers. He's from a very different profession. And he is somebody who I think I respect the most as being a standalone individual who became so renowned for his investments, that today he is actually more famous than a lot of seasoned investors being in the market for such a long time. So if I were to choose, or if I were to tell you to select a role model, I will say go with investor 4, because the other 3 investors, day and night job is investing. This guy doesn't even look at his investing once a week or once a month. But he's today, I would say, if I were to these are numbers that are of 2015, 2016, but if I were to relook at these numbers, this investor would maybe in the top 2, if not in the top 3 for certain, in terms of these 4 investors that we are talking about. Now, so sorry, before I move on, the price of Mojo Professional on the site is for a year 30,000. We are still maintaining our webinar price at 13,000 for a year. and we are maintaining our 2-year price as 24,999, which is a 53 and a 58% discount. Let me just give you a little bit of a reflection on this. Uh, we were giving the least price that we've given in the history of Markets Mojo is around 7,500, 8,000 on a 1-year basis. A lot of you guys have taken benefit of that. And the least price that we've given for a 2-year is around 14,999. The prices that you're seeing now is not something that is the end pricing. These pricing, as I've told you, and I think last 2 months back, I've been telling you that my personal aspiration is to take the prices up to around 40 to 50,000 a year. And we will take it within this particular year. So for all the investors who feel that, oh my God, the price have increased by 4,000 rupees for 2 years, which is 2,000 rupees a year, I must warn out here that the prices will further go up as soon as the technical product comes in. So it's a question of 2,000 a year, which is 4,000 rupees or 5,000 rupees that the prices have gone up by. But I can tell you that my clear strategy is to have focused professional investors who pay us well, and we give them good service and we give them good returns. For that, if we have to go at even a 40 to 50,000 rupees a year pricing, we will make sure that we do that, because there is a lot of things that are coming out in Markets Mojo platform for which we will command that price, if not today, maybe in a month's time or maybe in 2 months' time. So my humble request to all of you guys who have been looking at the price and saying that, you're still getting a 53 and a 58% discount versus the website. And you can go and see the website, the prices out there, these prices are not available. You need to make sure that you are covered long run. And I would still urge you to make sure that if you are not extending, please extend, because once we declare prices, we've not declared lower prices ever. In the year itself, we've increased the prices 2 times. So you can imagine that in the next 6 months, what we'll do, the prices will further go up. This is exclusive webinar prices only available on the links Jason will put. And with that, let's move on. So there is, guys, there is one, I'm going to talk about 9 or 10 things out here, but there is one thing that I will today tell you, which is the most important thing, and which is being fearless and being patient. Now, being fearless is not being stupid, right? Being fearless is not being stupid. Being fearless is to make sure that when the market is fearful, you are being patient out there, right? When the market is being fearful, you are being patient out there. I get close to 100 responses from Mojo professional users on a daily basis, and I try and answer as many as I can. But I can tell you, when I see those pattern of 100 people writing to me on a daily basis, I see exactly the same pattern which I have noticed in my previous experience of the last 27 years, that out of these 100 investors approximately who write to me on a daily basis, 90% of the investors are worried about their performance in the last 1 to 2 months. And my standard reply to all those investors is, sir, if you're looking at a 2-month, 3-month return, you should not be in the equity markets. Please do not make mistakes, right? If you're trying to, if a 2% loss or a 4% loss or a 6% loss shakes you so much that you're looking at, and that is not something that is a 3-year loss or a 2-year investing loss or a 1-year investing loss. It's a 2-month, 3-month investing loss, 1-month investing loss. Majority of the queries that come are people who've invested in the month of July and August, right? And they're scared about their portfolio being down by 3%, 4%. Now, this is the only trait that I can tell you, that if there is one thing that you will need to learn, इसमें कुछ दो राय नहीं है, इसमें there is no other way in which you can grow in this market if you don't have the virtue of being patient and being fearless in a fearful market, right? A lot of people talk to a lot of analysts. A lot of these analysts, I have ran CNBC channel, And I can tell you that I used to meet people where from Monday to Wednesday their views used to change. Oh, market is going to get into a bear mode, and from Wednesday the view was market, I think, is out of the bear mode, now it is going into a bull. And I'm telling you, these are educated 15-20-year-old people who are coming on the channels, and they're talking about it, right? View changes like this, target prices changes like this, they will change their view, and they will make sure that when you talk to them, your view will also go as per up and down as per the emotions of the analyst. We have always told you guys that being patient is not talking to people, not talking. You get onto your CNBC channel, there is one guy who will come that I'm seeing this, the other guy will come, I'm seeing this, third guy will come, I'm seeing this. A lot of you guys ask me what is my personal view in the next 1 month, and I'm telling you that nobody has a firm indication of what's going to happen. It is just about a view. It is just about a view. Everybody is giving a view from the point of view of their own standing, not the point of view of looking at the fundamental data and telling you what is happening. Even if they look at the fundamental data, there is no guarantee what they are looking at today is going to come truthful tomorrow. So हमारे पास जब आंसर नहीं होता है तो हम बोलते हैं हमें नहीं मालूम. Instead of telling you that this is where the markets can go in the next 1 month, we can only assure you that fundamentally कुछ गलत नहीं है. Nothing is going wrong fundamentally with the economy or with the market. Yeah, there are certain set of fears of higher valuation, or there are certain set of fears which can drive. Like yesterday, I was talking to you about some trading froth that is there in the market. I said, वो आएगा 5-10%, 5-7% का आ जाएगा और क्या हो जाएगा? Right? So those kind of things may come, which are transitionary in nature. But if you see that if somebody says that अब वो 30% correction आएगा कि नहीं, 40% correction, उसका तो कुछ indication है ही नहीं, because there is no fundamental dent in the economy that I can see, or the data is showing us when you look at the data on Markets Mojo, or you look at the data out there. But there are 90% of the investors who will typically go towards looking at these short-term approaches and try and move in and out of the market, or try and increase and decrease their allocation. And I'm warning you from this honey trap. Why do I call this as the honey trap? This is a honey trap because just to gain or not lose that 5%, or just to gain that incremental 5%, you will be breaking your journey. Market only rewards people who are there for a long run and who actively look at their allocations and manage their allocations over a period of time. There is no other formula. There is no other formula. There is nothing like I will catch the bottom and I will exit at the top. ये सब बात करने की चीजें हैं, पढ़ने की चीजें हैं, good things to read about. History books are written only by the people who won the wars. Right? In a market where 2, 3, 4% people eventually become multi-baggers and they make money, you have to decide whether you are going to be in that 96, 97% range, or you will be in that 2, 3%. Problem ये होता है कि 2-3% people will write the books and they will talk about this is what I learned and this is what I gained from, but very few people will tell you what they lost from. So most of the time you are trying to catch the top and trying and getting out, or you're trying to catch some correction so that you can reallocate. अच्छी बात है. It's not that I don't want you to gain that 5% if we have a little bit of a bottom coming in, but that is not a sustained strategy, because what will happen, you will get early out of a stock that is moving. You will get out of the market when the market reverses. You will not have belief in the market in a fast moving market. You will get out of the market when the market corrects a little bit, when you can get extra opportunity to get in maybe. So there is a huge host of decisions that you will take wrong. And that is the reason my first advice, which I've learned, is that be fearless and be patient, right? As I said, being fearless and being stupid are two very different things. I'm talking about being fearless, not being stupid out here. Now, every time the market goes down, I've seen these investors are very active. वो बॉटम फिशिंग करने निकल जाते हैं। कौन सा अच्छा फंडामेंटल स्टॉक टूटा है, राइट? सो इफ यू हैव a list of stocks that you plan to enter, but you feel that they are overpriced right now, and they are the stocks that you would want to keep in your watch list, you keep them in your watch list. And if they break out, that may be a time for you to get in. But the converse of this for the losing investors is that every time the market goes down, you have to understand, why does the market go down? Why does the price of a stock move up and down? The price of a stock, what simple terms may I'm explaining you, that it is only about the price of a stock means that you are talking about being a mix of the demand and supply in the market. When the market goes down, that means more investors are selling, less investors are buying. When the market goes up, that means less investors are selling, more investors are buying. It is as simple as that, right? It is a demand and supply which is across the market and which is across any particular stock, because you can see the price movement on every stock. Now, when the market goes down, which means that more people are selling, less people are buying, that is where these investors would get active, and they would increase allocations into allocations that they already believe are great for them. So, for example, if I have a stock which is say 300% up, मैं आपसे पूछता हूं आप क्या करोगे उसके साथ? If I have a stock which is 300% up and the market goes down 5%, my stock goes down 20%. My stock goes down 20% and the markets went down 5%. What would majority of the investors do? The stock is a strong buy, fundamentally great stock. What would majority of the investors do? You would say 280%. I've got a return of 280%. Markets are looking shaky. Let me get out. That is the difference. The difference is conviction on the stock has not changed. Fundamentals of the stock has not changed. Market has corrected. Because of the market, the sentiment has corrected. Because of the sentiment, the market has gone down. And because of the market going down, the stock also has taken a beating. But the stock has taken larger amount of beating than the market because it had an upward run. Do I invest more in this stock or do I get out of this stock? Right. Example number two. Example number two is I hold a stock which is 20% down, which is a strong sell category stock, right? Market goes down by 5%. This stock goes up by 10%. Will I put in more money in this stock, or will I say that I'm not going to touch this stock till the time it comes back? You will say market is down, my stock is moving up now. Should I put more money because now it is coming back to my principle? Classical mistake. Classical mistake, right? Mistake number three is when you see a stock which is a lot of investors typically look at, and these are seasoned guys. When you look at them, they look at their definition of a 50 rupees stock and a 500 and a 1500 rupees stock is very different. Somewhere investors feel that a 1500 stock cannot become a 3000, a 500 cannot become a 1000, but a 50 rupee stock will easily become a 100 rupee stock, right? And hence the whole evolution of tips in this market. आपको कभी किसी ने इन्फोसिस का टिप दिया है, आपको कभी किसी ने मैस्टेक का टिप दिया है, आपको कभी किसी ने एचडीएफसी बैंक का टिप दिया है. Whenever the tips come where you will have to first of all pick up your phone and find out what is the name of this company that I've got. And that company, if somebody is under a buying spree of that company, it may just go up, say 30%, 50%, 100% also, right? But for every example of something that is going up against the fundamentals with that volume, there are 99 other examples of the stock that didn't go up. And we get caught in this whole greed of trying to move fast in the market. Yesterday, when I was talking to you, I was telling you a simple concept that fundamental investing karenge, you guys cannot go wrong, because where can you go wrong when you're investing on fundamentals? You can go down. You cannot go wrong. your bounce back will be much faster than anybody else, provided you're always invested in strong buys and mojo stocks. No, a lot of you investors have said that, which is great, even when I don't agree with your allocations. But a lot of you investors have said that, you Mohit, I have only strong buys in my portfolio, which is a great call that you've taken. That मैं strong buy category में रहूँ, right? You will not be able to go wrong. The only difference of opinion that I've had with you on the strong buys in is that do not buy 40 strong buys in sit, because उसका जो mix होगा ना, that will eat away your returns. So strong buys and stocks that are moving better need more attention and more allocation from your side rather than the strong buys which have corrected. A strong buy stock, I have two stocks. One strong buy stock which has moved up 60%, and the other strong buy stock, it is again a strong buy stock, but it has gone down by 30-40%. Which stock will I invest in? ये myths हैं. I'm breaking your myths. I would typically go with the stock which has gone 60-70% up. I would not go and invest in a stock, or I would not increase allocation in a stock which is 30-40% down, even if it is a strong buy. ये बहुत ही simple concept, in simple terms I've explained you, right? Because if you can get this whole thing, then आपको ये qualities पे काम करने की जरूरत नहीं. You know that I have a simple logic here. My logic is fundamentally strong company is a strong buy or a mojo stock that is taken. Now my second logic that I have put out there is that if the stock is down, I'm not increasing allocation, and actually I'm taking away allocation from there and allocating to stocks that are doing better. Simple. With that, let's move on to the third one, which is these guys are in love of equity. They don't date. कभी मैं इधर कभी उधर. अभी मैं I have got a great opportunity in Alibag, so I'll buy a place there, and I have got a great flat opportunity. Somebody is selling land in Nagpur or in Jaipur. It's a great opportunity. Let me go there. So they don't get, let's say Bitcoin is going up here. Let's do commodity. Somebody was telling me I need to invest. Gold ऐसा हो जाएगा. कोई मेरे को बता रहा था, तो यहाँ से लेके they are not. They have a simple focus. They know that anything can give them 1,000% return also, which is fine, but they know that their whole allocation to equity market is not going to change. And I have seen personally 90% is an understatement. Most of these investors, apart from keeping some contingency fund, or when they require the funds, they are allocated 100% to the equity asset class. Their mutual fund allocations are zero. Not to say that you should follow that advice, right? Because हम लोग तलवार लेके निकल जाते हैं, लेकिन then with that sword we need to kill as well, right? We need to make sure that we keep that sword properly as well. Because you may say that I will take this approach, Mohit, I will go with 100% in, but when the markets are down, you will not be able to take the pressure, because you need to understand the whole investing as a principle of being patient, right? If you have that in you and you are only in fundamental stocks and you are increasing your allocation to winning stocks, there is a 0% chance that in the long run you will go wrong. There is a near 0% chance that you would go wrong in the long run. Now, whenever I have spoken to these investors, कुछ पता नहीं उनको. उनसे you will ask them Bitcoin क्या Bitcoin, commodities क्या commodities, because इसमें क्या है इसका, मेरे को कुछ मालूम नहीं, right? So there is this single focus, but when you ask them about stocks, or when you ask them about balance sheets, numbers, when you ask them about markets, when you ask them about what other investors are doing, they have so much to offer you. But in terms of other asset classes, if you talk to them about anything, they will understand the implication of those asset classes on their own equity class. So when you talk about that, I think the government GSEC bonds is now giving around 8-9%, and they will have a logic of why the GSEC bond can affect the equity market in a negative way if the bonds are going up, rather than the other way around, that they will say that let me invest or allocate some money in GSECs now at around 9%, 10% and all this stuff. They are not bothered about that, right? So the everything for them culls down into allocation about where their understanding is and what they need to do about their personal allocations to equity market, rather than trying to figure out intellectually, rather than trying to figure out where they can invest in new opportunities. New opportunities are new stocks, new opportunities are within the portfolio, new allocations that they do, those are new opportunities. They don't talk about their wins or losses in public. Very simply, they will not talk about how much they made on a daily basis or how much they've lost on a daily basis or what their total returns are. Never seen them. And trust me, I've been very close to these people, very very close as family, and they will never boast about their wins and losses in public. Now this is the conviction. Most of these investors, when the market is even down 30%, they will talk about when will India become a 5-10 trillion dollar market. You have seen this, I have seen this, and I used to look at these guys sometimes talk to me and say that abhi kya itna matlab mood down hai, and you're still talking about the long term story that was there 6 months back, now it is not there. And that is an amazing feature that I've seen, that they don't lose only their balance. In fact, their whole this whole correction piece in the market is very good for them, because they feel that ye jo investors आके they play around with the market and they make the market so volatile, वो settle हो जाएगा थोड़ा. अभी the real mall of investors will be left in the market. People who are doing fundamental investing, people who are staying patient, people who are looking at opportunities to buy in these markets. This trading froth or this new investor base that is coming in to try and in and out, which is causing immense amount of volatility, will go away. Volatility is a factor of immaturity in a market, which is philosophically speaking. Volatility is also a factor of having a technical overlay in the market, if you are talking in terms of technical ways of why the volatility comes in the market. Market becomes shaky, people become shaky, so people have decisions that are in and out decisions, which creates volatility. And number two is in the fear of height, a smallest kind of news, right? वो जैसे अभी PSC का circular आया, market तोड़ फोड़, small caps are cracking, nobody read the circular. What was that? That was only because investors started panicking on what is happening in these sectors or what is happening. ये कौन सा है, तो सब small cap सब गिर जाएगा, market का मतलब mid cap सब हो जाएगा, micro cap story खत्म हो गया. I was laughing after the webinars that we were doing with you guys, and I was saying some of the investors were saying, "Arey, somebody is actually only hitting Mojo stocks here. Somebody is only looking at your stocks and hitting it down." This is all immature talk. Nobody is looking at anybody. This market is too huge, guys. Too huge than you and me. You and me, including Markets Mojo, cannot impact the market in a way that maybe one stock here or there, but we are not there to impact the market. We are not even 1% of the volume. We are not even 0.5% of the volume. So there is nothing that anybody can do to me, or because I come in somebody's attention, and nobody wants to beat somebody up in the market. Please understand this. आपको किसी को मारने के लिए पहले खुद बाहर निकलना पड़ता है. Right? Why would you do that? Market is going one way up or market is doing well. For you to kill somebody, first you have to say that मेरे पास इतना माल होना चाहिए कि मैं ये stock को ठोकूंगा. I will sell this particular stock. So you will first of all lose your own money trying to get the position down, because you have so much volume that with every volume you throw the stock in the market, your price is also going down. Nobody does this. These are immature talks that somebody comes in the market to kill the other person up. This is not something that happens. These things happen in the corporate ballrooms. They don't happen in the open market scenario where you have wisdom of crowds going around, because you may be one of the players. There is 95% of the volume that is lying outside, right? So conviction of the bear market, not the conviction of the bull market. बुल मार्केट में तो कन्विक्शन की जरूरत ही नहीं है ना. कन्विक्शन वैसे ही होता है बुल मार्केट में. इन द बेयर मार्केट, हाउ यू से दैट वाओ, दिस इज अ ग्रेट टाइम, दिस इज अ ग्रेट टाइम, आई नीड टू स्टे फोकस्ड इन दिस टाइम, बिकॉज यहां पे मैं दो चीज कर सकता हूं. if I can do bottom fishing of great fundamental stocks, or the second thing is this gives me good enough time to look at my whole portfolio and try and see where I can reallocate. Reallocation mein, I gave you a lot of examples right now about stock going 300% up or stock going 20% down. Just make sure that you're not getting out of a fundamental good stock, because uska jab rebound aayega na, you'll be surprised. वो 300 टका से टूट के जब 280 पे आएगा या 260 पे आएगा, एंड द मार्केट गोज अप, यू विल नॉट गेट चांस टू गेट बैक. इट विल गो बैक बिकॉज वो जो अच्छा होता है ना, पीपल रन आफ्टर दैट स्टॉक अगेन. बिकॉज दो इन्वेस्टर है, एक इन्वेस्टर आप हैं, एक मैं हूं. मेरा स्टॉक 300% अप था, आपको भी अच्छा लगता है वो स्टॉक, यू ऑल्सो लाइक दैट स्टॉक. Now let's assume that you are saying this particular stock is very expensive. It's 300% already up, right? Now, when the stock comes down, say 20, 30, or maybe 10%, 20%, whatever it is. Let's assume that it comes down to 250. If it comes down to 250% profit for me, I am saying that I will get out. Why? Because I've already made my money 250%, right? That is the approach that a lot of investors follow. What is the approach that you will have? अरे यार ये तो 50% टूट गया, अब तो वापस जाएगा ये 300 पे. Go back and check the history of what happens on 52-week highs. A stock, अगर आपको एक सिंपल ट्रेडिंग अप्रोच करना है, मैं आपको बता रहा हूं, लेकिन करना मत, बट यू कैन वॉच इट, सी इट. A stock that hits a 52-week high will make another 52-week high. A stock that makes a 52-week low is not a buying opportunity. It is again going to make a 52-week low. वो 52-week high and low is such a big misnomer in the market. है क्या 52? It's a 1 year high or low, no? 1 year high पे है वो. That doesn't mean that the stock is now peaked out. यहाँ पे 52, oh, stock has touched 52-week high, तो क्या हो गया? What has happened then? In I think a year back or something, when people used to say market is all time high, I said market range bound है पिछले 5 साल से बाबा. If you see it over the last 5 years, today it अगर वो थोड़ा 10% up है तो तुमको लगता है कि all time high है. All time क्या होता है? All time high तो इसका market का 2015-16 में भी आने वाला था, but that didn't come. So market is not given that. Market is, if you see, actually given only 14% return yet. It's not that your market has given huge return, but 14% to give you 14% CAGR return, someday the market will do 60%, because some year it did 5%, no? Some year it did minus 5% also. So overall, if you see, अगर वो 14-15% CAGR कर रहा है, इतनी कोई बड़ी चीज नहीं है. एक साल मार्केट ऊपर जाएगा फिर नीचे आएगा, अपने को तो ओवरऑल चाहिए ना. When I look at markets, I would always say that if I were to look at my portfolio performance, or if I were to look at my stock performance, I'm looking at my stock performance in 3 to 5 years. So why am I worried about this particular year and that particular year? Or why am I trying to figure out anything? So for every good stock that you are willing to sell, there is another guy who's sitting, who didn't get into the rally, who is willing to buy that stock. So when this whole correction piece happens and you are the one who gets out, there is another guy who's watching the stock and saying that, great man, it is 10-15% down from the top now. This is a great time to buy this stock, because fundamentally it's a great stock. You also know fundamentally it's a great stock, but you're saying that मेरा पैसा बन गया. पैसा बनने का definition क्या है? What is the definition of my money is made? Is your definition of my money made is that if I made 100%, I'm very happy? Or you are basically saying that I make 100% or 200% or 300% or 1000% or 5% or 10%. If the stock is fundamentally good, what is the reason for me to lose conviction? A lot of stocks that have been made multi-baggers, right? You've seen that they've given 3 years 1000% returns, 4 years 1000% returns. Usme, we have to make sure that we participate in that rally to the full. We don't get out at 50% because 50% is great. Yeah, now let's get to another stock which will give me another 50%. We participate in that rally, because the more you participate in that rally, the more that stock goes up, the more should be your conviction to make sure that uska allocation to वैसे ही आपके portfolio में ज़्यादा हो जाएगा. Any stock which is today 10% in your portfolio goes up by 300%, आपका उसका तो हो गया ना. You are at a 35-40% allocation of that stock, provided other stocks have not moved that much. But I'm saying even if the other stocks have moved that much, you're still around 25-30% allocation to your portfolio. If you are at 25-30% allocation to your portfolio, similarly, if you have 2-3 stocks, even if you're sitting out there and making sure that you don't take the decision of getting out from a good stock which is moving up and may correct by 10, 15, 20%, right? You will still make sure that you will have 3-4 stocks which will keep going there, even if you don't change the allocation to the other stocks and are not convinced to invest more in this stock at higher valuations. Perpetually bullish is a mental state of mind. Perpetually bullish is a mental state of mind. It is not an action that you do in the market, right? Which means that if a lot of times I've told you that my habit to invest is that I will invest when I have the money. So it is not that today if I have the money, I'll say, Arey yaar, now I will invest in this particular opportunity or some other opportunity. Markets work. I have the money, so I'll invest. I have a simple principle. It has worked. And I can tell you that if you try that principle, there is no chance that it will not work, provided you have a vision of staying there for 5 years at least, and you're basically saying, I don't need this money. So kya hoga? What is going to happen? Sometimes I will catch the bottom, sometimes I'll catch the top, but apne ko wo dekhna hi nahi hai, because we are in great fundamental stocks. So the fundamental stock should give me a 30, 35, 40% CAGR. Agar mere ko de raha hai wo 40% CAGR, to mera to paisa on an average in a 5-year basis, if you're talking about doubling up your money, you're talking about 2.5x of the money that you invested over a period of time, or 3x of the money that you invested. That is what I'm here for. अगर मैं 1 करोड़ डालूंगा तो मैं 3 करोड़ निकालूंगा या 4 करोड़ निकालूंगा. That is what you are here for. Now basically in that case, एक ट्रांच मैंने डाला वो 5% डाउन हो गया, एक ट्रांच डाला वो मेरा 10% अप हो गया, एक ट्रांच डाला मेरा ऐसा हो गया, बट मेरा पूरा ट्रांच is what I'm looking at. So that is how you would today look at. I was looking at my portfolio today, and it is a portfolio that I started around a month back. It is around 8% up. I said, चलो अभी तो कुछ नहीं मिल गया. अभी आप क्या सोचोगे? मेरे को नेक्स्ट ट्रांच डालना था. मंडे को आई एम पुटिंग इन माय नेक्स्ट ट्रांच. इफ मंडे आई एम पुटिंग इन माय नेक्स्ट ट्रांच, आई हैव two ways in which I can think. What is the first way of thinking? अरे यार, एक महीने में 8% पोर्टफोलियो ऊपर है, अभी क्यों वापस से इसमें ज्यादा पैसा डालूं? 2-3% का करेक्शन आ जाएगा तो डालूंगा, राइट? वो 2% का करेक्शन आएगा, आप उस दिन बिल्कुल नहीं डालोगे. क्यों? क्योंकि आप बोलोगे अभी तो 2% का और आएगा इसमें करेक्शन. ये तो नीचे, अभी तो ये तो मोहित ने बोला था डाउनवर्ड नाइफ को नहीं पकड़ना चाहिए, सुनील ने बोला था. आप उसका पूरा कॉन्सेप्ट का भाजी पाव बना दोगे कि अभी तो नीचे जा रहा है, अभी मैं इसको और नीचे जाने दूंगा. दैट स्टोरी विल नेवर एंड. वो 2-3% नीचे जाएगा, फिर 3% ऊपर आ जाएगा, फिर आप बोलोगे अरे तो वापस आ गया उसी लेवल पे, आई शुड वेट नाउ. सो इसका तोड़ है. There is a solution to all of this, right? Is that when I look at this 8% up, I say that I have a cushion now. Even if the portfolio is down 10%, what am I worried about? There's nothing. पर अगर ऊपर हो गया तो अपसाइड मिलेगा, अगर नीचे आ गया तो ठीक है ना, राइट? बिकॉज वो एक जो भी वॉलेटिलिटी आएगी, इट विल अब्सॉर्ब द वॉलेटिलिटी. वेयर इज द प्रॉब्लम? बिकॉज मेरे रिटर्न में क्वेश्चन आ गया अब तो. बट ये जो अनबुक गेन और लॉस का कॉन्सेप्ट है, राइट? मेरा 40% रिटर्न था और ये 35 हो गया. आपने ना तो 40 बुक किया ना आपने 35 बुक किया. मुझे when I am 80% up in my portfolio or 20% up in my portfolio or 10% down in my portfolio, it's a number. I'm not going to book it. आप समझ रहे हैं? It is a number. I'm not going to book it. ये mental pain है सिर्फ. It's a number. So if it is a number, what are you trying to do? Is you're trying to say that I'm allocating because ये number जिस दिन आएगा बड़ा बिकम, I'm to there in the market for a long period, right? So if I'm there in the long period, the numbers will keep changing on a day-to-day basis. YOY change हो गया, एक month का number change हो गया, 2 month का number ऊपर नीचे हो गया. इसमें क्या है? These are numbers. You're not going to book it unless you say that मैं तो वैसा investor हूँ, 20% आ जाता तो मेरे को उतना ही चाहिए. Like some investor said that मेरा तो हो गया. मेरा portfolio is up 75%. I made my money. I'm retiring. Then you are right. But if you are there and saying that it consistently बनेगा ना यार, बनते जाएगा ना. 75% ऐड हुआ, अभी अगले साल -10% होगा, फिर मे बी 20% ऐड होगा. वो 75 को मैं मार्केट से क्यों निकालूं? मैं प्रॉफिट बुक करके उसको प्रिंसिपल पे क्यों लाऊं? That is known as compounding of growth. right? That is known as compounding of growth, and that is what we have to look at. They have a concept of VAR which is in their head very strongly, which is value at risk. What is VAR? Is that मैंने 100 रुपए पे डाला, fundamentally great stock, मेरे दिमाग में है कि बॉस 80 पे तो मैं निकल जाऊंगा. I am not going to book losses in a stock beyond a point in time. These are not model portfolio approach, guys. These are individual stock approach. So don't confuse all of this with model portfolio approaches. So when you are basically saying that mere stop loss is a mental affair. I've always told you target price and stop loss are two mental affairs. I don't have a target price, but these guys also don't have a target price in their head, but they always have a stop loss in their head. That I invested in a great stock, nahi chala for whatever reasons, market is not liking the stock, whatever happens, I will get out and I will stand out of the market. I will respect the market more than my own decision. Classical other side mistake. I like the stock, it is down 20-30% more, अभी तो मैं और खरीदूंगा इसको because अभी मैं इसको एवरेज कर लेता हूं और इतना डाल देता हूं तो मेरा stock is now only 10% down. They say that there is some reason the stock is not moving out. I'll come to it later. मेरा stop loss लग गया, मेरा VAR आ गया है, my value at risk has, that target has been achieved and I will get out of this particular stock. I will sit outside because अभी I don't know ये क्यों नीचे जा रहा है, अपने को समझ नहीं आ रहा है अभी. Biggest of the investors say the same thing, that it is not a fault of yours. It is a fault that you guys don't understand that सब कुछ अपने हिसाब से नहीं होता है. Market has its own way of working. Market has its own way of working. Investors have their own way of working. So if a stock that I have bought, which is fundamentally great, still has gone down, I have no clue. I have no clue. The only thing that I know is that kuch to ho raha hai, which is the market knows better than me or this particular stock. If the stock has gone down, I will have my VAR at a stock and I will move out. As simple as that. Right? This is a quality that I have, I have discussed with you a lot in the past. Concept of going concentrated and keeping to increase allocation into winning stocks is, according to me, the biggest art of getting rich with single stock investing approach, not with the model portfolio, single stock investing approach. Staying concentrated and having the art of allocating long term big money in stocks that are performing well is the single most multi-bagger approach, is the single most wealthy approach that I have seen investors working. Slowly, they will keep increasing, not looking at the price of the stocks that are doing well, which are getting rewarded. Slowly, they will keep getting out of stocks that are great but not being rewarded. So they make a portfolio, then they do this. There are stocks that are either landing and there are stocks that are either taking off an allocation. Right? You understand this? So this is the cross balance that they do. They don't do this. They do this cross balancing, that जो चल रहा है वहां पे slowly increase the allocation, जो नहीं चल रहा है वहां से slowly decrease. Why slowly? Because if this starts working, then you'll say, okay, started working, no issues. But let's just do a small movement of reducing from this and getting out. Over a period of time, it doesn't work, and keep increasing allocation systematically towards that. Single most approach, guys. Single approach, which I've seen works the best. The result of that is this. The result of that learning is this, that they go right just like the average investors. उनका success rate, are you be surprised, आपके success rate से कम होगा. अगर आप अपना पर्सनल पोर्टफोलियो निकालें और उसके अंदर देखें कि there are, like I have 15 stocks out of which 7 stocks are doing well, you're doing great. वो मेरे को नहीं देखना है. मेरे को I have to see that उस जो 7 stocks that you were doing great, उसमें आपका allocation कितना है. Allocation is the magic here, guys. Catching the right stock, the whole market goes towards catching the right stock. We have to make sure that अब वो तो सबको मिल जाएगा, because our markets में जो platform पे lakhs of investors, everybody gets those stocks, right? You are also getting the stock, I am also getting the stock. But trust me, if I and you were together on the platform, my allocations will be much higher. Why is that? Two stocks that both of us got, my return, my net worth increased by much more than your net worth, right? Two stocks gave 100% return. Two stocks gave 100% return. Your net worth increased by 10%, my net worth increased by 50%. कैसे हो सकता है? Because you may have kept stocks which were there as sells in the portfolio. You may have profit booked this particular stock because वो 50 पे गया परसेंट पे तो अपन ने profit book कर लिया थोड़ा. I may have done extra allocation when the stock went up 30%, 40%, 50%. So net worth growth, the growth on your total investment is not the magic of catching the right stock because you have the right stock, I have the right stock. It is about making sure your allocation on that stock is right, because when you win, your win has to be a great win. When you lose in a stock, your stock allocation should be marginalized over a period of time so that you know that I lost, but so be it. 10% मैंने ये स्टॉक में डाला था, ये स्टॉक 30% आ गया, लेकिन जब ये 30% आया तब तो और 40% आ गया. Whatever, it came down to 40%, but by that time I was already 2% in the stock. So it's okay. Right? So this concept is, if you learn this concept, this is the outcome that I have seen these people invest. And that is why today majority of these investors will have, I think, 40 to 50% in a single stock, because it's not that they invested 40 to 50% on a single stock. It became like that because over a period of time their allocations became like that, and they are never out of the market and very rarely take any kind of a cash calls. As I said, cash calls are dependent on whether they have another bigger opportunity that they need to look at. They will cash out of the stock and they will invest in another big opportunity, but it is about being in the game in the longer run. We've covered this. Now, I'm going to talk about what I've learned as the two big takeaways is that patience is equal to luck. A lot of investors say, "यार मेरा lucky नहीं है. Whenever I touch a stock, it goes down." Right? Whenever you touch a stock and it goes down, is the biggest thing that I have heard. Is I think I have heard this at least a couple of lakh times from investors. I am very unlucky यार. तू बचा, तेरे को short कब करना है? Because मैं जब stock खरीदूंगा तो उसको बाद short कर दिया करो उसको. Right? So this is something that is, and I have always told them, because you don't know one simple attribute of investing, which is patience is equal to luck. You cannot dislocate these two, and there is nobody who's purely playing on luck. The more you are patient, the more you will become lucky in the longer run. And the concept of winning is equal to higher allocations, not finding the right stock. Finding the right stock is always there with you. That is something that will remain with you. But winning big in the markets is about having higher allocations rather than finding the right stock. Agar you understand these two things, that I need to be patient and I need to make sure that I need to very actively look at my allocations, right? These are the only two things that everybody else in the market does. I'm not trying to tell you to become an analyst or become an economist or become interest rates का impact and commodities का impact and all. वो सब हमारा काम है. That is all our work. You've given that work to us. This is what I expect you to look at personally, and this is something that we will guide people even on the HNI side or the new product launches that we do, that make sure that your allocations are right when you're winning, because that will take away everything. 30%, 40% gain or 100% increase versus 20% dipping stocks, allocation क्या है? Because as soon as you play allocation, ये wide ऐसे हो जाता है. Right? From here, it becomes so wide because of your allocation, because your net worth increases, your overall return on the total holding has to increase, not on a stock. So with that, your best value offers today, as I said, was 1 year 53% discount, guys. 2 years is 25,000, which is 58% still. You'll be surprised because in the next some weeks, these prices will further go up by 5-10,000. So I expect you to take me seriously on this and make sure that you are extending as much as you can. With that, let's go to the Q&A session, Jason.
Sure. First question by Darshit. Is it possible that the Markets Mojo IP can underperform for, let's say, 1 or 2 years? What's your opinion on this?
Yeah, absolutely. Why can't it underperform? I don't think so. It is something that will underperform for 1-2 years. I think in 3 months, 6 months at maximum, it can definitely underperform. But I don't see a chance why it will underperform for 1 to 2 years. That is something that I find it highly unlikely.
Okay, question by Mr. Amit Shenoy. I recently joined Markets Mojo. I already had a robust portfolio of around 15 stocks, which is up more than 50%. Further, I made a model portfolio with aggressive 10 stocks and Mohit's multi-bagger 10 stocks. Now I have 35 great stocks. But it's being advised to hold maximum 20 stocks for great returns. What should I do now?
Yeah, so that is something that I'm still advising you that your model portfolio approach is separate. When you are looking at single stock investing approach, so don't count your model portfolio as अगर आप mutual fund को stock अगर आप if you invest in mutual fund and you also invest in equities, you can't say that mutual fund के में 50 stock हैं अब मेरे पास और 10 stock हैं तो 60 हो गए total. You don't do that, right? So the same way is that keep your model portfolio out. Don't look at your model portfolio allocations because that can keep changing. Only when you're looking at your personal portfolio, only when you're looking at your single stock holdings, that is when the approach of 15 to 20 stock goes.
Okay, question by Vinod from the YouTube chat. All this talk is good, but don't you think it's very contrary to Markets Mojo's approach of not doing a buy and hold strategy?
Sorry?
Are you saying the talk you've given, is it not contrary to the Markets Mojo's approach of not following a buy and hold strategy?
No, it's not at all contrary. Buy and hold is when you take a stock and you're sitting with it for 10 years. I'm not telling you to sit in a stock for 10 years. I'm not telling you. Simple example is Mastec. We keep giving you this example. The stock is up around 440, 450 odd percent, right? A lot of investors that we know in Markets Mojo Professional got out of that stock when it was 50% up. A lot of investors asked us, कि अभी तुम क्यों इसको, why are you still talking about this stock when it was 100% up? A lot of investors talked about the same for 150. I'm not talking about a time factor. I'm saying till the stock is performing. Till the stock is giving you that can be 1 year, 2 year, but I'm not talking about you take a stock and you sit on it for 10 years without looking at it. Buy and hold strategy is that wo jo hoga, I'm sitting on the stock for 10 years, 15 years, I'm going to gift it out to somebody, right? So that is not, it's not at all contrary. Today, if you have, the top Mojo stocks, if you see, they are almost at 11-month, 12-month category. Now you can say 11-month, 12-month is a buy and hold. No, it is not. Buy and hold category can be 4 years, 5 years. I'm not talking about buy and hold categories out here.
Okay, Mo, this is a question by Mr. Mohanty. He tried to reach out to me personally as well. And this is the question he had. When I joined Markets Mojo in July, one particular stock was sell and strong sell on the system. I had 100 shares and I bought the stock. It had slipped to around 1,000 and it was at 1,200. It had slipped to around 1,000 and I had no stomach to sell it and incur a loss. I held on, and in the end of August, there was a sharp rise, and it went up further in just 1 week. I not only recovered my cost, but also made a handsome profit in this strong sell stock. Don't you think the system's recommendation of sell or strong sell should be first considered by the investment committee before it is put out in public domain?
No. So there are 4,000 stocks. Ek stock ka, if I were to go towards the investment committee, we only look at the top stocks out there. And Mr. Monty, we have over a 80% success rate on sales and strong sales. So 20% stocks, agar wo upar ja raha hai, to that is because of your luck. That is because of your momentum of the stock. I mean, if it's a strong sell stock, I'm telling you, it's a loss-making company. Now, if and not to say that loss-making companies can't go up. So if you look at some of these companies which are loss-making, there are so many strong sales or maybe junk stocks that are going up. So I am a fundamental player. Whether these stocks go up, it doesn't matter to me. For me, it is a sell in my system. Because for me, as I said, that fundamentally these companies should not be going up, but there is a trading froth, there is a momentum that is happening in the market right now, which will take this up. And lucky for you that you made your money on that or recovered your money. I'm happy for you, but that is not going to happen all the time, because 80% of the time when I'll give you a call on sell or a strong sell, you will see that the stock will further go down. And if you you need to not just have the stomach but the large and small intestines to digest the loss if you're in the market. As I said that, nahi to, what will happen is that this loss will only become bigger, and you will try and undercut the good better positions to recover this particular loss. Because aap to portfolio ko dekhenge, you will look at the portfolio and you will say that this stock was down 20%, this stock has gone about 50%, but my total investments are now 10% up. Happy, right? So I'm saying that there are always fair amount of chances that a sell and a strong sell can go up. And in our system, as we've seen over the last 6 years, there are 20% of the chance that the stock can go up. But fundamentally, it is a strong sell. If you're talking of a stock with strong sell without even knowing the name of the stock, I can tell you that वो loss में होगा, उसका पिछले 3 quarter से loss हो रहा होगा. There is no reason for it to go up. But there are a lot of players in the market. There is a lot of strategies that are happening in the market. There is a lot of underlying price movements that are happening in the market. That is short term. Why don't you wait for a month or 2 months and see where the stock goes back? So you've got a blip advantage. That is great. But that is not something that will happen all the time. In fact, majority of the time that will not happen.
Okay. Next question is by Mr. Gautam. My plan is to shift all my investment to stocks over the next 6 months to 1 year. I have already exited all my PMS and reinvested in stocks.
Sorry, can you repeat that, please?
Yeah. My plan is to shift all my investments to stocks over the next 6 months to 1 year. I have already exited all my PMS and reinvested in stocks. I have pulled out 30% of my mutual funds and moved them to stocks. I would like to know what to expect in the next crash so that I can plan accordingly. Believe me, I'm not afraid, just want to be prepared.
I don't know. See, you're again asking me a very theoretical question. I can only give you a theoretical answer to this. Because as I said that, I consider myself as future stupid, which is that instead of giving you, my intelligent guesses, I may as well give you my firm answers. So my intelligent guess, which I will take no guarantee of being 100% wrong, is that for me the crash is not imminent. There is no market crash that I'm expecting. Corrections are something which is a part of the game, and a 4-5%, 7% correction can happen at any given point in time. But I would not say that I'm expecting a 30% crash in the market or a 40% crash in the market. There's nothing that is emerging from any data point that we are looking at for that particular. There's nothing that is happening across, unless you get into a situation of war, unless you get into a situation which is external factor driven. Fundamentally speaking, there is nothing that gives me any indication of a crash in the market.
Okay, one question on upward averaging by Mr. Prasad from the YouTube chat. I have a stock which has given returns of more than 75%. It became expensive. Shall I add more to it from stocks which aren't performing?
I don't know what the overall rating of the stock is, sir. If it is still a strong buy or within a buy category upwards of 70, I think you should increase allocations.
Okay, question by Mr. Chatterjee. In case of correction of bear markets, the same fundamental sound stocks will come down in the score from strong buy to buy. Do you adjust the score of 80 for strong buy during a tailwind scenario?
No, we don't do that. We don't say a strong buy stock. If you have 50, 60 strong buys in a great market scenario and it comes down to 5, it means that there are only 5 strong buys. We don't change the scale of 80 or 60 or 40. We don't change the scale during anything, because that makes the scale irrelevant then. Because you're then saying that in every market you have a strong buy. In fact, it gives us the market contraction. It gives us a better insight in terms of how many stocks are contracting now in the market in the range. But if you change the scale, then it is worthwhile, because then even if the market is 30% down, you will be talking about 50 stocks that are still strong buy in that market. So we don't increase the scale, and that is actually the right way of doing it.
Okay. Question by Mr. Venkat. Do you have anything in your IP and algo to capture frauds and misappropriation of funds in companies and capture this in the rating?
Yeah, we have a lot of factors with which we check on frauds, which are built in the quality parameter. A lot of times these factors have worked very well for us, and in fact we had written a blog by the name of When the Dog Barked. This is a famous famous Sherlock Holmes story, on which we had written a name of around 12 odd companies where we found a lot of irregularities. We also, please understand that we are also supplying this data to Bombay Stock Exchange and National Stock Exchange. So there's a lot of data that indicates various things in our system. The only thing that I cannot capture is some promoter goes rogue at a certain point in time. That is something that I can't capture, because that is intent. But measurable data which can be captured to give indications of there's something wrong, and the data looks wrong, or the data looks overheated up or overcooked, is something that can easily be found out.
Okay, a lot of investors asking about the blog. You can actually search it, The Dog That Didn't Bark, on Google
Yeah,
with Markets
yeah.
Mojo, and
You
you'll
can
get that.
search the blog. You can search it on Google. The Dog That Didn't Bark by Markets Mojo, and you'll get it.
Okay. Um, yeah, so moving to the next question. This is by Mr. Mohammed. I have invested in two Markets Mojo portfolios. One is up by 24%, which was started in May, and second is up by 12%, which started in August. Now, again, I want to invest. So, can you suggest me which portfolio should I have to invest, or create a new portfolio instead?
I would say that I don't know. Are these two different profile portfolios, or it's same profile portfolios that you started two times?
I think you not mentioned that, but you could
Yeah.
put it on the
So I
chat.
will need to know. So my answer to you would be different if you say, Mohit, I started one profile portfolio two times, which is in June or in August, or maybe I started one portfolio and then I started another profile portfolio after 2 months. So I will need to know that to give you answer.
Okay. Next question. This is by Mr. Alvar Swami. He says that Mastek already had gone up by 400%. What made you to still recommend it a buy? Do you have any target based on future earnings, or what drives to make you recommend a stock which has already gone up by 400%?
Stock going up by 200% is nothing. We don't take that into consideration at all. I'll be very frank with you. Unless the stock is commanding such high valuation that we can't measure it. As I said, that till the time the stock is fundamentally doing well, long term and short term, it will remain a strong buy in our system. There are chances where the stock technically turns around and gives a price indication of something going wrong at that point in time or in the future, and that is the time that the rating drops. A lot of people say that how a stock which was 84 became 70, because there is something that happened on the price that is basically challenging the whole fundamentals. That is the only way it can go down. But whether it goes 400%, we are going to hold the stock. Whether it goes 800%, whether it goes 2000%, it doesn't matter to us, because if it is fundamentally good, then we will keep holding it. Return as a parameter is not used in Markets Mojo to ascertain when do we need to change the call on a stock. I'm being very transparent to you. We don't look at returns, and that is one of our biggest successes, rather than inhibitions, or rather than drawbacks. Because if we were to be looking at returns as one of the parameters, then your returns will not be halfway there of what we've given you.
Okay, one question on the four invest topic. It's by Mr. Rakesh. Could you please throw light on the initial capital and CAGR of these investors?
I can't comment on the initial capital, but I think the CAGR would be in the range of around, say, 45, 50 odd percent. But you're talking about 30 years period.
Okay, question by Mr. Deepal. Hi Mohit, I have no need to take educational loan for my son, 25 lakhs, but I have to redeem from my investment. But some thought came to my mind to take a loan at 7%. What's your view on this?
You can't get an education loan at 7%, first of all, because it is an unsecured loan. You only get secured loans in that 6 7%. 7%, unless you take it from outside, is not possible. I have always suggested you that if your loans are in the range of 6 to 7%, they are palatable, they are affordable. You can take those, but do not go for lending and then investing into the markets, and do not go for loans that are in the range of 9 10% and then offset your take loans at that kind of a range and then not take out from your investments. But if you're getting a loan at 6 7%, I think it's a fair approach. I mean, there's nothing wrong with it.
Okay. Next question. This is a lot of investors actually asked this question. This one by Mr. Inder Mohan. I have created a model portfolio on August 16, but it was moderate by mistake. I want to know if I can convert this into an aggressive portfolio.
Um, we are coming out with that approach, sir. But abhi to dono moderate or aggressive, they are both mirroring each other. There's not much of a difference in their allocation approach. So don't worry. By the time we launch that feature, you will be able to convert the moderate portfolio into aggressive portfolio. Currently, as I said, the market cap allocations of both the portfolios are running neck to neck. So there is no difference in both the portfolios as of right now because of the market cap split that has happened.
Okay, one question by an investor. Do you have any thoughts on ideas similar to small cases instead of sector agnostic allocations? Will this ever be considered a Markets Mojo with period rebalancing recommendations?
Sorry, say that again.
Yeah, do you have any thoughts on ideas similar to small case instead of sector agnostic allocations? Will this ever be considered Markets Mojo with periodic rebalancing recommendation portfolios?
No, so periodic rebalancing and recommendation is something that we do. Our portfolios are sector agnostic. The only thing that we have is sector caps that we do. But coming out, as I said, that the HNI product that is coming out can invest 100% into one sector. We are coming out with that approach where we are removing the sector biases out there, or maybe the sector, I would not say biases, I would say the sector caps out there, because if there is a big rally in one particular sector, why would you limit it to a 25 or 30% allocation to that sector? So we will be coming out with that approach, but that is an approach that we don't want to risk with our all investors. We would create a separate portfolio, and we'll be calling investors to participate in that portfolio if they feel like, on a separate basis.
Okay, question by Mr. Rajesh. If I want to keep some money, a percentage of money for a future fall, what could be my strategy here?
If you want to keep a certain set of money for your future call, what can be the strategy? I think, it's a very difficult one, frankly, Ajish, because I am somebody who's 100% invested at any given point in time. My future call is when I get some extra money and surplus, and that is the time that I may take a 1 week, 2 week, 3 week call, sit on it, and have the pleasure of getting something 2% down or 3% down. But on the total investment size, actually, there is nothing that comes to my mind as a recommendation that you should be holding 20% in cash and then waiting at an opportunity. That is something that I'm not a subscriber of, frankly.
Okay, and we've got this question by a few of the new investors. You answered this previously. Question by Mr. Dhruvil. Is there any tool on Markets Mojo that can show all stocks having more than 80 scores at one place?
There is, you can simply go to the Mojo stocks and you will get a listing of all those stocks, because most of these stocks will be on Mojo stocks. If you were to see, all the stocks which are typically there. The other is that you can store those stocks in your watch list, and you will keep seeing those. On the screener, we haven't introduced, and neither will we introduce, a feature of screening basis stocks, because the screen grabs can be taken, and people can download those stocks. But Mojo stocks is somewhere where I would say that it's the best place to see all the stocks which are 80 plus, and those stocks are numbered on your fingers. So it's not that you'll have to, there are a lot of stocks that remain out there. So you can see all of those stocks on the Mojo stock list.
Okay, next question. This question is by Mr. Rajesh. He wants to know that when it comes to allocating more to upward trending stocks, Is this something which already happens in the model portfolio as well when you do an add investment?
Yeah, no, it is something that doesn't happen in the model portfolio. It is something that is a single portfolio approach, because the what we don't do is that we don't rebalance the portfolio down. So just give you an example, when we started a model, let's assume I start your model portfolio and I've invested in 10 stocks at 10% each. If that stock goes to 30%, we don't rebalance it down. We don't cut it down to again 10%. That is something that we don't do. We let it grow. But what we don't do is that the new money that you put in, we put it in that particular stock. Because by not cutting it down, anyways, the allocation to that stock is going up. So that is something that we let it grow. We don't, unlike a lot of other portfolios where they'll say that every 6 months or 3 months, I will trim it back to 10%. That is something that we don't do.
Okay, and we got a lot of questions on multi-baggers. I'll just pick this one from Nehal saying, mostly people want multi-bagger stocks. So my suggestion is that every month suggest one multi-bagger stock like our product stock of the month. So could you look into this?
It's something that I do on a weekly basis. And this week I've taken a gap. I'm going to do it next week again. So why one? This is something that I think we should keep, you not just looking at multi-baggers, but also reviewing our performance, because it's not about stocks again, it's about allocations. So ideal situation should be that I should have 100 investors who basically start building a portfolio with me, or 1,000 investors who start building a portfolio, and then we say that kiska allocation badhana hai, kiska kam karna hai. As I said, multi-bagger stock may not result in multi-bagger returns unless the allocations are right? So the thing that we need to learn is the art of allocation along with finding the multi-baggers. But I anyways do it once. I think once every alternate week I do a webinar on multi-baggers, which I think I did last week. I have not done this week. Next week I'm going to do it again.
Okay. Question by one of the attendees is that can we not have an approach where frequent review of model portfolio is not required and the model portfolios would be reviewed once in 6 months? What's the benefits of this?
Why should we do that? I'm going to review the model portfolios on a daily basis. Things are changing very fast. I think there's no point if I was churning, buying and selling stocks on 2 days, 3 days basis and all the stuff, I can understand what you're saying. If my churn rate is 1.7, 1.8, which is hardly, if I buy 10 stocks, I'm selling and buying only 6 stocks in a year. Why would I look at something on a 6 monthly basis? A lot of things can change in a 6 monthly. I find no logic why we should not be looking at every 6 minutes rather than. It's not that every 6 minutes looking is changing your call. It is just that you're alerted, and we are monitoring it every 6 minutes or 5 minutes. For I'm just giving you a 6 minutes because the question was 6 months, but we are monitoring it on a real-time basis. But it's not that your portfolios are getting request on a day-to-day basis of buying something or selling something. So.
Okay. Yeah. So this question by Mr. Raj Kumar Singh, when it comes to booking profits, at what percentage of profits one should exit a stock?
Sir, there is no concept of booking profits. If the stock goes into a sell category or a hold category, you sell it. Otherwise, you keep holding it. If you are I'm assuming you're a Markets Mojo member. So if you are there in Markets Mojo system, I'm repeating this for all the investors. We don't have a profit booking approach in Markets Mojo portfolios or in Markets Mojo single stock strategy as well.
Okay. This one question on allocation by Mr. Bhushan. I have 20 lakhs. Could you let me know how much I should invest in equities and how much can I invest in debt funds?
I can't tell you that till the time I know your profile. I don't know your liabilities. I don't know your age. I don't know your income. I don't know your expenses. How can I define your allocation, sir? I need to know a lot of those things to give you any answer to a very broad question like this. So apologies, I'll need to know much more than that.
Okay, and we've received a lot of questions on the HNI product. Many investors want to know how would this work.
I have said this every day. I say this every day. You will have to wait for 2-3 weeks. HNI is a separate product altogether that is coming out. There are two things that will happen out there. One is personalized portfolios for investors and personalized sessions, which is typically one-on-one meetings with me and Sunil and the leadership team or the analyst team, so that we can not just talk on a wider forum, but we can meet you and evaluate you on your portfolios on a frequent basis. So it will be a personal approach where we will like to meet all of you guys or whoever gets selected for the HNI product, and then we will manage the portfolios out there rather than just being a simple approach out there. So that's the reason it'll be a personalized approach by not just looking at one portfolio, which is a special portfolio that we are creating, but also looking at your overall financial plan, other investments, what you can do out there. So we'll become like a personal financial advisor to you in that case.
Okay, and we've got this one question, Mr. Rakesh Mishra, is that are you planning to do more Infinite webinars as well and discuss
Yes.
about stocks and portfolios of various countries?
Yes, we are planning to do a host of new webinars on Infinhub as well. Just make sure that you have reviewed you have renewed your Infinhub memberships by a larger margin. That is not something that you need to look at on a yearly basis. You need to, because Infinhub prices will go completely different. Infinhub prices will be in the range of $1,500 to $2,000 a year. Right, we are giving at huge discount right now. So make sure that if somebody is keen on global markets, make sure that you at least have a 5-year hedge of no price increase by buying it. But yes, we would be doing much more sessions on Infinhub starting next week itself.
Okay, Mr. Mohit, that's with the Q&A session.
Yeah. So thank you so much, and we'll see you tomorrow. I think Sunil is doing interesting stuff tomorrow, so we'll get back to you. Thank you so much, and a good night.
Yeah, I've dropped the links for the offers, and also, yeah, as Mr. Mohit rightly said, Mr. Sunil will be doing a metal sector webinar. A lot of you all have questions on metal sector. So simply click